Nelson not wasting any time. We have never done a daily bar analysis of the 6B. But today, we change the course of history. Well played, Nelson. Well played. Well played. Fascinating. Okay. Carrie, we actually made this chart, didn't we? Holy crap. Melissa, was I on peyote when we made this? Nice. We got to come back to this, don't we, Carrie? That's funny. I'm digging that. Woo! I never did drugs in my life, but if I did, I have a feeling that chart would be the result. All right, Nelson, let's stop horsing around. This is serious. Why don't you take this more seriously, Leidick? We have on the higher time frames tools available to us that are predictive in nature. The one included with the Flex Investor package is called the Flex Daily Cycle Markers tool, and it is awesome. Then we also have the Flex Orion, which is immediately to the right. Okay, so Nelson, since you made me look at this weird instrument, I'm going to be calling on you a lot. Is that okay? Or can I pick on you, or do I have to reference other people? Okay. So, are you familiar with how the daily cycle marker tool works? There are 4 phases that repeat indefinitely. 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4, 1, 2, 3, 4. And those 4 phases are represented by colors and dots on the chart. So most recently, we'll change the colors of the candles so you can see them a little bit better. So they're not so, yeah, there we go. So Nelson, everywhere you see a little green dot is a phase 1. Everywhere you see a large green dot is a phase 2. Everywhere you see a little red dot is a phase 3. Everywhere you see a large red dot is a phase 4. And then the cycle repeats. 1, 2, and then yesterday, ding, was a phase 3. With me so far? Upper right corner, it tells us when the next phase is coming. 1, 2, 3, 4, and 4 is coming in 6 days in 10 hours, which is fantastical that we know this. So 6 calendar days from now, we're going to have another big fat red dot. So one of the first things we do is, Nelson, we look and see how accurately are these signals determining when things are going to happen. And so kind of looking back into the past, we get an overall sense, Nelson, that the signals have been relatively accurate in their predictions. Is that a fair statement? When there's a large green dot, that market tends to rise. When there's a large red dot, the market tends to fall. And it appears to have been falling for quite some time. Right, we're down there. We're absolutely down there at the bottom. Okay. Short term, the very shortest of information that we have available to us involves the phase that we're inside of. So currently, we have a phase 3. So this day yesterday was a critical day in the sense that when we're in an uptrend, Nelson, there are things that we expect in a phase 3 environment. Now last night I sent out in the webinar a handout, and the handout had a cheat sheet. Here we go. And the cheat sheet looks like this. I put a copy of it in the chat box just now. Do you remember this? When you arrive at a red dot or a selling pressure time in an uptrend, the market tends to do this. It tends to start going sideways. It may go down, but at the very least we expect consolidation. Market goes into a range. People take profit from their previously purchased instrument contracts. So we saw an example of that over here, bud. The last phase 3, I want you to look, and the candle of the phase 3, I'm just looking at the bodies of those candles, Nelson. The candle of the phase 3 set off a consolidation phase right here. So if I'm just going to do the bodies, I actually have to just do the bodies. So far so good, brochacho? Okay. So if we were to make an assumption, so far we have that consolidation range. If we were to include the wicks of those candles, we have this. Okay, and if we were to include the wicks of this candle, it's pretty large right there. So at the very least, for the next 6 days, we expect the 6B to be inside of that range. Now, I want to do something here real quick. Just indulge me 1 second. Okay. Nelson, I took the signal, and I took every signal on my chart, and I shifted it one day into the future. So this green dot that was here used to be here a minute ago. This green dot, Nelson, that was here, shifted one bar to the right. This red dot that was here shifted one bar to the right. This bar here shifted one bar to the right. And what I'm looking to do is, Nelson, I'm looking to see if these turds are manipulating the market, but they have an agenda where they're offset from the other instruments. And I have a suspicion that I'm just exploring. And it appears, Nelson, do you see how the signals are lining up at the exact lows and the exact highs when I shift it one day forward? For example, here, 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 and here. That breakout, the center of that pivot, this is in the right spot now. Everything was off just a little bit, and that tells me that the pound responds about a day later than most every other instrument, right up to and including this signal here, over there, down here. It's starting, all the signals line up better when we're offset about a day. Okay. I would make the argument that it may even be 2 days, but I'm going to leave it there for now because it's pretty close. When you see stuff like this, that's pretty close. Okay. All right, so that's my first thought. Make the days, that indicator setting is called days advanced warning, and I shifted it one day forward, not one day back, one day forward, by putting a -1 in all of those values. All right, so the next thing I'm looking at, let's get rid of this stuff. So far, so good. This, for me, is like going to the gym for my brain. Okay, Nelson, if that's the case, the phase 3 is going to be on the close of this bar today. When today closes, today will be that selling pressure day. And so one of the first things I see on the chart is a stop run candle right here. When we come into selling pressure times, historically, Nelson, there's a pop. So for example, look over here at this phase 4. There's the prior swing high. And do you see how they come up and that wick takes out all of the weak positions right there? They kind of push it up and then it falls away. They kind of push it up and then it falls away. So over here, you even see it. By the phase 4, they push it up and then it falls away. And that's stereotypical move. Now I'm not sure what happened over in here. My data's pretty screwed up here. Let me try to reload that historical data because something's up in that market. No, it's still screwed up. Okay. So Nelson, I expect this move, this bullishness, to continue higher as they continue to trip out those stops. Okay. Until the close of today. When we get into the phase 3s and phase 4s, they're climaxes. They're climaxes. They're big pushes up. They'll let the retail traders drive it up too. Now, that's the first thing. That's local. We're local to this area. The second thing I'm going to do is I'm going to go into the indicator and I'm going to turn on the resistance levels for each of the time cycles. Every time cycle that exists has an associated resistance level that comes with it. And if we turn them on, Nelson, you see those lines? Of course you do. Why would I ask him if he sees them? He saw them. These are the associated support and resistance levels for this market. And I want you to see where we are in relation to pretty much everything. And I'm going to go ahead, brother, I'm going to pull this down so you get a sense of where the levels are and what we've been doing in relation to them. This will also confirm or deny whether or not our dots are in the right spot because we shifted everything one bar to the right. And I'm looking to see if these touches are coming in the right spots or not. I'm just going to go back real quick and try something. And then I'm going to go back and change it back to what we just had. If you'll just indulge me 1 second. You know, I got to say, Ernie, I think not shifting it one day was the better thing. Yeah, I'm going to go with the original. I know why I want to do it. But Nelson, when I took the shift away, the support and resistance lines are behaving the way I expect them to. Yeah, they were, but Carrie, it didn't look right when I did it. Everything was off when I shifted it. But when I brought it back, you see how the SR levels are almost perfect? Like right here. It's holding the low better. And then it held that low. And it missed this one by 1 pip, which is what I'm used to seeing. And then it missed this one by 1 pip, which is what I'm used to seeing. Yep, so you see the same thing. Okay. So Nelson, the level that it's going for right now, again, this is all locally. It sort of has a roadmap of where it needs to go and what it's got to get through to get there. In the middle of your screen is a cluster right there. There are 1, 2, 3, 4, 5, 6, 7, 8, 9 daily cycle marker resistance levels. And when that happens, you'll see that there's a tendency inside of that zone for the instrument to get stuck, like quicksand. But now we're kind of in the free space, right, brother? In this free space between 3039 and 3099. So right now your operative levels for support are here and for resistance are here. So basically 3100 area and support at 3037. There's another heavy support area at 3021. Okay, so far so good. Okay, I'm sorry I took you down that rabbit trail with the shifted dots. Okay. Now, one of the things I want to study is I want to look for phase threes like this one here. And Nelson, I want to get a sense for whether or not we've seen anything like this in the past. Are there any stop run phase threes that we can study? So for example, get a good look at that. The big long wicks on either side and a new high. I want to see if I've ever seen anything like that in the past. New high, phase 3. And I'm going to turn these lines off just for now. So we don't get overwhelmed. And I want to see what do the banks usually do on a phase 3 at a new high. So Nelson, here's an example of that. Right there. New high, phase 3. This is a lower high phase 3, so it doesn't qualify. There aren't a lot of them, are there? Not in a downtrend like this. Here's a new high phase 3. And it kept going through. Prior swing high, new high. Excuse me one second while I take a screenshot of that. And if this confuses you, please tell me. We don't have to get too deep into this today. Let me just look here real quick. Okay. That's what we were looking for there. Matter of fact, let me get a screenshot of that. So Nelson, I'm looking for other other iterations in the past where we saw this kind of a move. Phase 2 up, sideways, phase 4 up, sideways, up into a phase 3. I'm looking to see if that's ever happened before in this instrument. Because if it has, it might give us some clues about what they're setting up next. So I'm looking for a big run up that starts with one of these green dots right here. And gets all the way up to a phase 3 at the top. And I'll be honest, it's been a while. But Nelson, here's what I want you to do when I'm looking through those things. I want you to look and see where you can find phase 3s at new highs. Do you see what I mean by that? When there's a prior swing high and we arrive at a phase 3, what happens? It either pulls away or it goes sideways, right? And I want to just kind of keep looking at that as I try to find that pattern that we're looking for right now. When you have a phase 3 at a higher high. So here's a swing high over here, Nelson. You see how the phase 3 drops down out of that? Okay, so we have a sense that it tends to be a bearish signal. Okay, here's another one right here, brother. See it? Prior swing high, phase 3 at the high, and then it drops down. So over and over again, there seems to be this tendency for that signal when it's at a higher high to drop out of warp speed and start to push down. And it's really rare this pattern that we have right now is super rare. We haven't seen it in a while. It's been normal rhythm here for quite some time. Appreciate you bearing with me here today. There you are. There you are. Okay. All right, so Nelson, check this out. Maybe I'm wrong. I might be wrong. I usually am. I took a screenshot of where we are right now, right? So the one on the right, Nelson, is the chart that we're currently in. I want to just draw your attention to this. Green dot, red dot goes sideways, phase 4, a lot of chop, green, 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 into an explosive higher high red dot move. You see that? Okay. Green dot into a choppy phase 3, higher high red dot, pull back into a phase 1, phase 2 goes up into a phase 3. You see that characteristic wiki candle right there in both sides of the chart? It's off 1 day in the pattern on the left compared to the pattern on the right. Now this happened in July and August of this year. It was a summer pattern, and this is a May pattern right here. But I want you to see the structure of it. The green is at the bottom, leg 1 to the phase 3. Then we have the chop section. Then we have the chop section. We have the higher high into the phase 4, the higher high into the phase 4. We have the pullback now into the phase 1, the pullback into the phase 1, the push higher into the phase 2, the push higher into the phase 2, brand new high by the phase 3, brand new high by the phase 3, and then the dive. So that's the first pattern that I can find back in 2011 that's similar to the one that we're looking at right now. If we look at the seasonal patterns like Carrie is describing, this is May 19th. We can go back and look at May 19th at prior years. There's one. There's May 18th. We'll go back a total of 4 years. There's May 21st at a phase 3. We'll go back one more. Here's May 22nd. May 19th would be over here. Okay. So 4 years ago, on this date, Nelson, they sold off into the phase 2. The earliest phase 3 in that area, in that region, the one that lined up, that came before it was right here. And that one produced a sell-off. Okay, if we go 3 years ago, the phase 3 on May 19th was actually the phase 3 on May 20th, and there was a sell-off. Two years ago, May 18th was a phase 4. It was shifted. and there was a sell-off into the phase 2. And 1 year ago, May 19th was here, and Nelson, there was a sell-off into the phase 2. Are you starting to pick up a pattern here? It seems like all 4 years there was a push down, and then the phase 2 it pulled up. That's a year ago. This is 2 years ago. There was a push down into the phase 2, and then it pulled up. There was a push down here into the phase 4, and then it pulled up. And then here there was a push down into the phase 2, and it pulled up. So of the 3 of those, the one that most closely matches what we're seeing right now, Nelson, is this one right here, because it's a phase 3 on that day, pulling down into the phase 4. So if we go to this year, it seems to imply this. Anybody see anything wrong with that analysis? We know that it's wrong if it touches this dot. It shouldn't go past this dot. It should not go past that dot, which is at 3111. But again, we're at that same spot over the last 4 years. Nelson, that's what usually happens at that line. When I show it this way, brother, I'm going to ask you to see if you see what I see. That's a really cryptic thing to say. Ready? Nelson, look. Down, up, drop. Down, up, drop. Down, up, drop. You with me? This is the same time of year the last 3 times in a row. May 19th. Carrie, this is the meat and the potatoes right here. Ernie, I think I got there. Whew, God, that took a while. The same thing happened here, but the trend broke 4 years ago. We had down, up, drop, and then Nelson, it didn't continue. They reversed and went the other way. And here's May of 2012. It does the same damn thing. Son of a gun. They go down. They come back and take out the new high, Nelson, and then they drop it. So for 5 years in a row, 1, 2, 3, 4, 5. There's a slide down a retrace back to the high, and then everyone gets sucked into the move, and then a panic. I wonder if it'll happen again. Okay, so if that's the case, man, who said 6B this morning? You're not allowed to any webinars in the future. If now that we've got this, let's really get our heads into it. Okay, so Nelson, here we are. The prior swing high was there. The prior swing high was here. And the prior swing high was here. Okay, so far so good. So far so good. Three years ago, they went this far above the prior swing high. 2 years ago, they went this far above the prior swing high. And then you got it, Chuck. 1 year ago, they went this far above the prior swing high. So Nelson, down here, it's a question of which is the prior swing high. So far, all I've got is this. That's the high that I've got to work with. Otherwise, locally, Nelson, it's down here, and that doesn't make any sense. So what I'm going to do, brother, is I'm going to take each one of these boxes that we drew, and I'm going to make a clone. I'm going to copy and paste, Control C, Control V. Control C, Control V. And I've made three boxes here. And so now, Chuck, I'm going to take a copy of each one of those boxes, and I'm going to put them down here on our high, like that. Okay, Nelson, does that make sense? Okay. The other thing I'm going to do, Nelson, okay, so we're measuring how much exertion does the bank commit to the stop run. How much exertion seasonally does the bank commit to the stop run? Okay, we have the phases too to sort of help us understand when the drop was going to occur. The next thing we're going to do, and again, we're just doing what the flux does, but we're doing it by hand because this is a pretty complex pattern. Nelson, I'm looking to see how much time it took for the apex to be reached. And we'll go ahead and use like a gold color for that one so we're not traipsing over ourselves. So that's how long it took for the peak to be reached, Chuck, right here. And then it fell. So I'm going to take that same approach, and Nelson, over here, take a look. That's as far as it took that year for it to reach its peak and drop. And then over here, this is as far as it took to reach its peak and then drop. Okay, so Michael, I'm going to take these three boxes and do the same thing. Copy, paste, copy, paste, copy, paste. And now Nelson, I'm going to bring those boxes down here. One at a time. And get a sense of how long the banks usually wait to torture people. Okay, so you understand where I drew those boxes and why they're there? The blue is price. The yellow is time. The blue is price. The yellow is time. Okay. So this is all time related, time based. All right, so now that we have that information, let's come here and blow it up and see what we've got. So long term, there are some nexuses. It seems like this starts to be an area of concern up in here. And that looks like 3,200. Yep. To 3,250. So we have two strong psychological round numbers here. We have 3,200. And then we have 3,250. And you know how that works. That kind of line up with that nexus. Those two things, the confluence points of those two things right there. So my long-term estimate here if we just look at those three patterns, the implication is a drop away. That's the other thing we didn't study, Nelson, how long the drop occurred. Third box. One more box, I swear, and that's it. 3 years ago, the pivot went down until here. 2 years ago, the pivot went down until here. And 2 years ago, 1 year ago, the pivot went down until here. So Nelson, 3 boxes, copy paste. Get rid of this one. And so now, Nelson, this is the pullback time over here. And I'm going to put that underneath. Down there. Okay, here we go. So the implication seems to be that the market pulls down somewhere into here. And then pulls up somewhere into there. Let's look and see how far the pullbacks were in the past. Okay? So there was a pullback down, Nelson, this far. I'm going to harvest that line and put it over here. The previous year, the pullback was this far. I'm going to harvest that line and pull it over here. 3 years ago, the pullback was this far. I'm going to harvest that line and pull it over here. And then 4 years ago, the pullback was that far. I'm going to harvest that line and bring it over to our box. Excuse me. What a puzzle. What a puzzle. Okay. So here's my first question. Nelson, do you see how all the lines are kind of almost the same size? Is that a little weird? It's a little weird, right? So I'm going to take those lines, I'm going to put them, I'm going to attach them to that one place that we were looking at a possible drop. So I'm going to attach them to that line. So here's what we tend to see. And I don't know if this is going to work or not, but I'm giving it my best shot right here. I'll be the first to tell you that half the time I don't even know what I said when I finish. There are two lines right here. At 1.25, which is also kind of funny that they line up with a strong psychological number. You have a line just below, right here, at 23.50, and then you have a minimum line right here. So the least, it seems, Nelson, they're prepared to push back is down into 27.69. And on average, most of the time, they're done pulling down by this blue line. The longest it ever took them to get that low was over here. Okay, holy crap. And then the implication seems to be that we go to here. And then, Nelson, the implication seems to be this after. And that's as far as I can take you with this instrument, brother. Is any of that helpful? Let me get you the, I'm going to save this workspace so that all my drawings are on it, and you guys can all have a copy of that. All right. I need a nap. I think I need a nap.